Hello, everyone. Welcome to the Ashworth Wealth Weekly Market Update. My name is Todd McChesney. We'll kind of jump into this week's slide. This week, we're going to highlight a chart that shows the resilience of earnings per share estimates despite economic uncertainties and the potential tariff impacts. Historically, markets are forward-looking, but earnings don't have to be. We always talk about how markets in the short run move based on fear and greed, but in the long run, they're going to move based on profitability. Currently, we're projecting in the first quarter of 2025 about a 7.1% growth rate. That's well ahead of the normal 4.4% growth rate for the first quarter of most years. The year over year for the full fiscal year 2025 is expected to be about 10%, and historically that's been about 3.1%. What's interesting is all of these were done prior to the tariff rollout, and so we don't know for certain how those are going to affect things, and will these economic assumptions hold accordingly. We generally feel that tariffs as a general rule will slow some growth, may increase some inflation, and it undermines confidence. So it'll be interesting to see if how the administration handles this. Can they use this as many believe they're doing as a negotiating tactic, and will it hurt margins, and is it a short-term play, is it a long-term play? So we're interested to see what happens, how will it affect revenues, higher costs, etc. The longer the uncertainty remains, the longer spending slumps, and the market may kind of have some volatility. So we'll kind of see what happens there. But what we do feel like is going to happen is markets generally are very, very resilient. You can see that in this chart here that the consensus earnings estimates for the current year are about normal where they are historically. What this means is they're generally over project earnings estimates, and then they kind of come back, and that's very normal to come back and say, well, we're not going to quite be as high as we thought. That's a very, very normal process. So this was all prior to the tariff rollout, so we'll kind of have to see what happens. But we don't want to make any rash decisions based upon what's going on in the geopolitical world, and we want to make sure that we understand that, I kind of mentioned to many people recently that government is generally not very smart, and business is more smart, I guess, for lack of a better word. So as government makes decisions and as policies change, businesses have to sit back and say, okay, how do we adjust our situation to make sure that we can be profitable in this new environment? And that's really what's going on. Retail sales have gone up 1.4% in March, and so people are still spending money. People feel confident about the economy. Some of that may be front running of tariffs. Some people were thinking, hey, I'm going to go buy a car now because I don't have to worry about paying more for the car, etc. So there's a lot of things that have happened. But companies are reporting earnings; they're profitable. But it'll be interesting to see how they can maintain profitability if the tariffs continue, and we just don't know exactly how that's going to play out. Sounds like right now many countries are coming to the table, and really, as I've mentioned to many of you as we've chatted recently about this is generally just a war is probably not the right word, but a negotiation between two countries. This is really between China and the United States. You have a situation where we're providing so many we're providing them so many opportunities. There's so many imports, and as we do that, there's a concern for the trade escalation from a deficit standpoint. We have a trade deficit with China. A lot of the other countries, there's obviously going to be some kind of a trade deficit, but China just does not take many of our products for obvious reasons, of course. And so a lot of those kind of see how this plays out. But for the most part, we're not too concerned about the long-term nature of the economy. We're not too concerned about portfolios per se, as long as we stay diversified and do the best we can to have access to all areas of the equity markets, whether it be international, domestic, even having some money off the table in bonds or fixed income. So we'll keep an eye on this and kind of see how supply chains are affected by potential tariffs. Are these going to be permanent? Are they going to be temporary? Are they a negotiation tactic? And we'll go from there. So keep that in mind. Keep us posted if you have any questions. We'll kind of continue to watch things and make sure that we're on top of things. We're always free to reach out, available if you decide to reach out to us. We look forward to chatting with you soon. Thanks.